Hello and welcome to Car Dealer Live. My name is James Batchelor, and today we are we're taking a look at our monthly look at used car values. Joining me is CAP HPI's Head of Valuations. It is the one and only Derren Martin. Hello, Derren.
Hi, James.
Lovely to have you on as always, Derren. Always good to chat used car values. So I remember this time last year, and not really knowing what the year had in store, and it turned out to be a bit of a bonkers year, as we know. We don't need to talk about that. But now in January 2022, is it a case of buckle up and here we go again?
Yeah, I think one of my team always is saying that what happened last year, we'll very quickly forget about that because this year's going to be just as interesting. So in a completely different way. I think it's been well documented the price rises that happened last year, almost up to sort of 30% on average, and some going up by 50, 60% over that time. So yeah, we've come into January off the back of a couple of, I would say, probably more difficult months than we had for the rest of the year. November and December values coming down, but at the time we were saying that was seasonality, and it was very much so really based on it always drops away in the final couple of months as we concentrate on Christmas really. And then we've come into January. I would say that the period between Christmas and New Year and probably the first week back were a little bit disappointing for retailers. The activity wasn't necessarily there to the degree they wanted it to. Probably a little bit of concern that it was going to be a continued trend, but we've definitely seen it improving as the month has gone on. From around that sort of weekend of about the 9th, it started to improve, and it's been steadily improving since. So, say it's been a reasonable month for dealers. It's not been on fire, but thankfully, Omicron wasn't as bad as people expected, or some of us were worried it could have had a lockdown effect. And it's been a reasonable month, I would say, for dealers, and they've been out replenishing their stocks in the wholesale market to a degree, not as much as they have done in the past, but to a degree.
Yeah. So, I mean, is there a figure that we can attach to it, or is it just level? Is that what we're saying?
So. There's lots of moving parts to it. That 3 years, values are actually level on average, but that doesn't tell the whole story. And we've been putting values of some cars up and some cars down during that, really. So things like Audi Q5, BMW X1, Grandland X Qashqai, they've been under a little bit of pressure and have come down in value. And then on the other side, you've got sort of Mocha, T-Cross, Touareg that have gone up. So it's been really, really mixed. Older cars have performed better. We've put values up on average at 10 years old by almost 3%, which is about £100 in monetary terms, so not a lot, but they have gone up. It seems to be that price pointed cars, lower price point cars, we hear of sort of around that £6,000-7,000 mark up to about £12,000 have been doing okay. Once you start getting up to £15,000-20,000 or above that, then they've been a little bit more sticky, and there's been a little bit more of a reluctance to pay those prices. I think there's been some selective reductions of retail advertised prices, cars that have been in stock for a while that maybe look a bit expensive, that type of thing. So it's certainly not been across the board that there's been no movement. There's been lots of moving parts to the market as always, and to be fair, it's probably more interesting than when everything was going up last year, because it feels like we're just trying to sort of catch our breath and find out where the market's going to go this year.
Yeah. I think that price point, that lower price point, is quite interesting. I mean, any idea why that might be, do you think?
I guess that's the necessity purchase. When you're looking at those more expensive cars now, at sort of 15-20 grand, those are cars that are older and more mileage than they were in the past. That looks an older car for those sorts of prices. So maybe consumers are balking at those prices a little bit, and obviously dealers looking to replenish are as well. So if you can get something that is cheap and they know they're going to move quicker, there's less risk in it because they've got less money involved in there, and they know they can sell them. So I think that's part of the reason why. And there's still there's some cars there that look better value than others around those sorts of prices.
Yeah. That must be quite difficult, quite a tricky conversation a dealer has to have with the customer, isn't it? They bring their used car in, of course they're getting top whack for it in many instances, and yet the car they're changing it for is probably older and is costing more.
Yeah, so if they want to spend a similar amount of money to what they paid maybe 3 years ago when they changed last time, they're now looking at an older car with more mileage on it to buy for that, whatever that price that they want to pay is. So probably a little bit of a shock. And then I guess the nice surprise that their car has gone up in value, and it depends how they're funding the vehicle. But yeah, definitely you're looking now at older cars with higher mileage that are at those sort of almost eye-watering prices. And then when you get to sort of late plate cars, they're obviously overcost new, some of them still. So how long can that carry on for? Probably for a while, but at some point that has to reset.
Yeah, very much so the latter part of last year, dealers were busy stocking up, weren't they? I mean, have you been hearing that dealers' stock levels are pretty good, or is there a bit of pressure in that area?
I think they're okay because the consumer demand hasn't been through the roof. We've heard the figure of sort of an 80% of a normal January for some, so it's not as good as it could have been. So I think they're picking off stock to replenish. They're not out buying in bulk particularly. They're just picking off at, when they've sold a unit, they're going to replenish it. They're not doing the bulk buying that some of them were doing around sort of September time of last year. They've still got cars in stock from there. So yeah, they're looking for not bargains, but they're looking for some good value cars. And now is probably a good time to buy for some of the smaller independents, because some of the bigger guys aren't necessarily out there buying in bulk. But when they do have success with some of the sales that are going on, and we have seen sales, which we didn't see any of that last year, but we've seen sort of money off sticker prices. We've seen free servicing offers going on, finance offers, those types of things, more off your part exchange. When the market picks up even more, then the bigger guys will be coming back in, and that'll put pressure on upward pressure on pricing potentially.
Yeah, and we spoke about this quite a lot last year, but where there were some absolutely crazy increases. Some used cars went up by 50-60%. Are we still seeing that in January, and are we still likely to be seeing that throughout this year, do you think?
We're not going to see it to that degree. Those crazy prices. You've got things like the Auris Hybrid, Zafira. I think they're the two that have gone up by the most. And when you look at that over the last 12 months, they've gone up by sort of 60-70%, so some of those cars. But the Auris in particular had dropped quite considerably the year before, because hybrids were under pressure at that time. So we won't see increases like that. We always see cars that some will go up, some will go down. We're still seeing some electric cars that are going up in value. That they maintain that they're in demand, and stock levels aren't high of those. So we're not going to see anything like what we saw last year. But at the moment, it's very, very stable, and some value cars are going up. It was interesting. I was looking at the sort of the top 25 cars that have increased the most over the last 12 months, and 6 of those were Vauxhalls. So maybe they've come from a bit of a lower base previously. They've done a lot of sort of rental in the past. Maybe their values weren't as high as other competitors, and they look good value, so they've gone up. So there's still a little bit of room for that. The semiconductor shortage is still there. Lead times are 6 months on average, more for some cars. So there's still a little bit of room for values to be strong for some time yet, but they won't go up by anywhere near what they did last year.
Yeah. I mean, the semiconductor crisis is still a major issue, isn't it? Perhaps Omicron hasn't been the shock value which we thought, what some people thought it might have been, but some people are telling us that new car supply might not improve until 2023. So that in itself is going to prop up used car values. There's not a crash on the horizon, is there?
No, and we've lost 1.5 million registrations over the last 2 years to what would normally happen. This year isn't going to be as up to normal levels, so you're going to be up to sort of 2 million cars over a 3-year period that aren't going to come back as used cars because they've not been built. So there's going to be shortages out there. There will undoubtedly be some pressure on price probably towards the end of this year and the second half of this year, because prices are high. We don't see them coming down anywhere near as much as they went up by. And then when you look longer term, those cars are lost to the market, and you're looking at sort of values in 2 or 3 years' time, that there's going to be a scarcity of certain ages of cars because of what's happened. So it's pretty positive for pricing, really. We certainly don't think, well, I personally, I don't think they're going to come back down to where they were previously. I think they will stay strong. They can't stay where they are a longer term, but they will return to a level where the market's comfortable with them.
Yeah, it's very much a reset. The last year's been a reset, really, hasn't it? In terms of not just in terms of monetary value, but also in what is the normal and what we expect from the market.
Yeah, and you've got to pay more for your car now. Your own car's worth more. You've got to pay more for cars. I think margins are healthy for retailers. They may have to do some adjustment on those because some of them do look pretty high. We track sort of registration numbers going through from the trade into retail advertising. You can see there that they do look quite high, some of those margins. They may have to be a little bit more realistic with those margins, but at the moment they're doing well, and there's less cars and higher margins. So it's kind of worked for most businesses who've had a really strong year. I think this year will be another strong year for the used car market, but might have to be a little bit more realistic on some pricing.
Derren, always a pleasure to chat, and until next month, we'll see you then. Thank you.
Yeah, great. Thanks, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.